Let's bring in the top-ranked retail analyst on Wall Street, Matthew Boss of JPMorgan. He just raised his price target, in fact, on that name. It's good to see you.
Good to see you, too.
You were a believer before many, right? Because the last time you were here, you had just upgraded the stock to a buy.
That's right.
Maybe 10% lower than where the stock is now. What gave you the conviction to do it then, and do you feel like you're getting the payoff now?
Yeah, so look, the conviction and the call at the time was after 2.5 years. I felt like the stock was tied to the P&L, and this was the first time I felt like the P&L had bottomed, meaning the income statement metrics, the top line, and the gross margin. I feel like you had hit a trough after multiple years, and most importantly, the last 12 months under new leadership, really taking defensive actions, cutting inventory. I think what you had last night in terms of the print is much more of a move to offense now, and I think that sets up the next leg in the story.
Okay, so you go from 93 to 100, right? You did that today. That's the latest move. How does Nike go to offense when you've got more players on the field who think they can take more of the game away, like On and Hoka and all these other names that have obviously had an impact on market share?
Right. So there's a company dynamic and then there's a stock dynamic. At the company level, at the more micro level, the most interesting thing right now that's changing is in September, from a micro merchandising perspective, they've put a new team on the field at a micro level that's now at every one of their partners assessing opportunities, inventory, new product development. That's what they had really walked away from in the last couple years. It seems like it would be table stakes, but that was when they were operating more for profitability, moving more online, and if anything, they alienated a lot of shelf space. That's what I think they're coming back to take. At the stock level, really, the call is pretty simple. 12 to 13% margins is $4 plus in earnings power. If you believe Nike can sustainably grow revenues going forward, this stock's actually trading 9 turns below where it was before this all started.
So it's obviously not going to be a 100-meter dash,
nope,
so to speak, for Nike to get it back. The question is it a marathon? Is it going to take a long time? What's your best guess?
So I think it's a marathon, but Nike's running the marathon at the pace of a sprint. And that's what I think was most important. They're at 1 quarter ahead. When they said their inventories would be clean, they're clean today at a global level. There's still pockets region by region, but by and large, this was earlier than expected. They're now 85% of regions are in positive territory for revenues. That was earlier than expected. They beat the street by 600 basis points from a revenue perspective and beat the street by 100 basis points in gross margin. So the gross margin recovery, I think, is happening more tied to the inventory cleanup. The product perspective, that's where I think this move to offense and being more on the ground at every one of their partners can lead to greater full price selling. And that's really the recovery of a 400 basis point margin shortfall over the last 3 years that they've suffered.
Is the story recovering at the same time that the consumer may be weakening just a bit? Nike price points aren't exactly inexpensive.
Right.
How do you view that?
I'm glad you asked about the consumer. So there's a lot being made of September relative to August and what we saw in July. So we look at Chase credit card data. The 2-year stack, meaning looking at what happened last year plus this year, is actually unbelievably resilient. You have seen zero change. You've actually seen the trend line from July, August, and September on a 2-year stack that's 400 basis points above the trailing 12 months. So I actually think the consumer continues to be resilient. August and July had the benefit of favorable weather on top of the catalyst for early back to school. When it's all said and done, I think the consumer now has the catalyst as we head into holiday, and the new STIP bill is actually stimulus-wise positive for the higher and middle income consumer. That's, I think, going to be another opportunity for the consumer as we move into the early part of the year. And if rates really come down, that is another opportunity, particularly for big ticket items.
I've got to go. Leave our viewers with your best-in-class name right now is what?
I would say
pick 1 or 2.
Best-in-class names: Ralph Lauren, Tapestry, Birkenstock, and then Nike for turnaround opportunity.
Well, okay. Matthew Boss.